juicy CPI data. Stellar spotted in the wild. XRP Xlm crypto fans watched closely today as CPI data came out, and oh boy was it juicy, and it sets the scene for something very, very interesting. That's right, was at the Braves game last night, so pardon the roasted voice. I got home super late, live about 2 hours, 45 minutes away. I'm at tons of Braves games. I'm a huge baseball fan, White Sox fan, got my Mark Burley back here hanging out, but we're going to talk crypto, CPI data, XRP Xlm price action. That's the focus today. Let's get into it. Bitcoin's at 30,016, ETH is 1917. XRP, one of the bigs on the channel, 50.3, with XLM sitting right now at 10.3, down 2.4% last 24 hours. Now, Klaus, yes, that's who I am. You guys can call me Klaus. I don't mind, first name basis. We're all friends. So you say, Klaus, you said there was juicy CPI data. Why is the market red? Hold on, guys. Let me show you some stuff here. Let's get into CPI data. What happened? Came out 5.0 for over the last 12 months with a massive decline in energy. Let's take things a little bit further, and don't worry, we're going to get into prices. Consumer Price Index for all urban consumers rose 0.1% in March on a seasonally adjusted basis after increasing 0.4% in February, so it slowed down. That's a good thing. All items index increased to 5.0 before seasonal adjustment. Let's take a look at this. And there was a stellar hat spotted in the wild by, yes, this gentleman here with his most handsome of grandson. I do go to a whole bunch of Braves games. If you see me there, I'll be wearing my hat. Make sure you say hello. Peak was in June of 2022 at 9.1. Previous month was at 6. We came in at 5. Now, that's the key here. That is what is so important about this move that happened today and the move that's happening in the market now. It's how big of a delta we have. And by a delta, I mean the change. Previous month was at 6. We're now at 5. That's a delta of 1, okay? A change of 1. That's a big spread. Jerome Powell was on the mic several meetings, right? These last several meetings, on the mic saying, hey, we need bigger drops or else we're going to drop the hammer on you. He has said it time and time again. What he's meaning by that is dips like this. When we look at the December and January data, we went from 6.5 to 6.4, a delta of 0.1. That's not going to win any awards anytime soon. What the hell are you going to do with that? 0.1? Yeah, that's bad. 1.0 is huge. The time before, we had a delta of 0.6. 0.4. Jerome Powell even then was like, guys, I'm not happy with this. I need more. Well, the market gave you more, Jerome. The market gave you 1 whole point in decrease. That is massive. That is massive. Let's put it into perspective on how that looks now stretched out to the broader 5-year perspective. Now, remember, the reason why CPI data is so big, this is the number one indicator that Jerome Powell and the Fed are going to use right now. Economy still seems strong when it comes to wages and all that, so not putting as much pressure on that. They're putting more, right, the oomph on CPI data. Look at how sharp this right here declined. That's a fast movement. That's exactly what we wanted to see. CPI data blows up, comes back down, right? Inflation goes up, comes back down. We didn't want to see anything going sideways. That is very, very dangerous. And what happened was we had a stretch right here. You see where it went sideways right there? You know what? Let's zoom in just a little bit more for you. This stretch right here where I said the delta was just 0.1, that's when the markets were super freaked out. But now 5. Now 5 is still high. Okay, mentally, I know. 5 is still way high. Food is still way high. Energy is still way high. Remember, this is last month's report that just came out. We know gas prices are going back up. Energy prices just spiked. This report came out before the OPEC decision on how they're going to cut production. Oh, so maybe we might have a little spike in stuff when it comes to energy next time around. So don't expect a 1.0 next time, Delta, can we? No, not if energy is going to rocket. Shelter was a big one as well. Shelter is still holding strong. Now, we're going to look at some CME data, charts and predictions. As always, any article you see in this video or any of the other videos I do will be linked in the description below. Current target rate is 475 to 500. only 24% of interest rate traders right now are saying, hey, the Fed is going to pause. Whoa. What? Yes. That's the freak out of the market. So for those out there like, wait a minute, we've got good news, but why is the market red? Because we are still pricing in a quarter point. I have it up on the screen. That's why you follow this channel. That's why you subscribe, because I'm piecing it all together for you. I'm showing you the information so you could do this as well. Showing you my sources, cited as always. 75% of the traders trading interest rates right now are expecting the Fed to come back in 21 days. Hit the subscribe button. We'll live stream that event. You guys are going to love that kind of stuff if you haven't. If you haven't, it is lit. Chat is lit. By the way, super thanks to chat today. You guys killed it. Killed it. Straight up effing home run by chat today. Rock on, guys. Great live stream. Check it out, though. 75% say the Fed is going to stay the course and do whatever they have to. The problem is we know energy is going back up, right? So if we know energy is going up, even though we don't know what the numbers are, we know we're not going to get a 1.0. We know we're going to get some, And what made this report look so juicy was the fact that energy was down. But now if gas prices are going back up because OPEC made the cut in production, we can then assume the thing that helped out this report the most is going to the next report the most. So yes, it was amazing to see 5.0, but the details are where the stuff lies, where the information is. Oh my God, my dog now just freaked out. I think lights fell on my dog. Hold on, I'm going to pause this really quick and I'm going to come back. Yeah, I really don't know what she did with the lights. I think she grabbed the lights. I don't have them permanently mounted yet. When I edit this, I'm gonna have to go watch back. But the devil in the details, right? Yes, we gain that 1.0 on favorable energy, but if energy prices are coming back up, we're not gonna gain that on the next report. In fact, it might not be juicy at all. Shelter is still high. So if we don't have relief from energy, and now we have to take that gain and we have to add it, ooh. So what we're thinking is, now that we have that data, now that we have OPEC that came out with the production, see, macros are still ruling the roost, everyone. OPEC comes out with it, so now we know energy is going to be a little bit more expensive. They might even ramp up energy costs this summer. Uh-oh, exactly. That's why when you start looking at the CME forecast on the people that make money trading this stuff, 75% of them are saying, you know what? Because of the future energy looming issues, Jerome Powell might have to just give us the old 25 anyways and slap us with the meat. I'm not talking the big Boku meat of 50. No. 50's not even on the table. Not even on the table. That's this right here, which is 525 to 550. 0%. No way. No way in hell. So now let's talk about what happened to XRP Xlm. We're going to get into more stuff. We might even get into a little DXY action, baby. Yeah, you guys love it. Told you, chat was lit. All right, so can you tell where the juicy data came from? Right here. The move. But people take profits. It's normal. This is totally normal. Wait until you see all the charts that I show you today. They're all going to have a very similar thing. Movement on the action, and then we're trying to find a settling point after, and that's what XRP is trying to do right now. Definitely, you could tell. Look at the volume spike here. I'll move it just so you can see a little bit better. Look at the spike right down here in the bottom. Big move on XRP. People pay attention to macros. You guys want to know when stuff happens? These are the moves, man. People pay attention to macros. Now, let's look at XLM. Same thing. Can you tell where the action was? Yeah, right there. Big green candlestick. XLM now is trying to find its footing. Totally normal, right? Traders are trying to digest this because now we're sitting here looking, and all of us are doing this. All of us that are deep in all these numbers, CME stuff, because remember, it's not just this, right? It's not just CPI. It's all of these metrics in here. We could start plugging this in. We could put rate, probability charts in, start building some algorithms. We could start inputting some data in here. You guys see what I'm talking about. There's a lot that goes into this. So what's happening right now is a whole bunch of people, myself, as soon as I'm done with this video, I'm going to start exactly doing that. I'm going to start building in more projections. Because I want to start looking at, are we really looking at a 75.2? If we're looking at the numbers this way, and Jerome Powell and Fed, are we all doing the same thing? We're all going to see where footing comes in, right? Where are we getting our footing after this move? Yes, we did good. This report, next report might not be so juicy, might be a bad one. Or we get some good energy news, which would then help us out on that future report. Shelter's going to be tough. Shelter's going to be a very tough one because in this summer, if we see the housing market start really ramping up, even if it's for a short amount of time, we got to be careful with housing. Very careful with housing. But anyways, XLM right now, XRP are trying to find footing after the move. XRP, obviously more volatile, still staying above 50 cents, happy with that. XLM above 10 cents, which should have 11, yeah, of course. Are we going to see big moves? Not unless some bad action happens. Oh my God, United States government, stay out of it. I don't need any crypto enforcement bullshit action. But the good news can come with the Fed taking the pause. A lot of pressure on Jerome Powell, but like I said, 75% of people are saying, hey, we're going to get hit. Now, here's the other side of the story. Inflation and what we're dealing with right now is very interconnected, okay? Especially in the crypto markets. Think about that. Crypto is, right, globally traded. So as we deal with inflation and price hikes and all that kind of stuff, we deal with it differently in different countries. What I have here up on the screen is UK inflation. And even if you don't like live in the UK, shout out to my UK peeps out there. But even if you don't, just hear me out. I'm going to show you how different this is. This is the UK's chart. They went way higher than us. They started moving on down, and then they had a pop this last time. So you know how when we look at the US's chart, and you see it, right? We hit that peak, and now we're coming on down. When you look at the UK's, look, yeah, they had the peak. They're not coming on anywhere near down to where they need to be. No way, not even close. The UK has got a way bigger problem ahead of themselves. So then we start looking at the fractionalization of money in the world, right? So now if the UK is having problems, but the US is getting out of them, okay, cool. We're starting to see some positivity, but that doesn't mean the whole world is positive. So again, yes, you can have good data that leads to bad prices. The reason it leads to bad prices is because we can start forward looking to other data that's coming in, OPEC action. UK having bigger inflation problems than the United States. Like I said, chat was that we had a whole bunch of people in the UK chiming in, letting me know the prices on stuff. This is really cool. You guys should seriously check us out. Next live stream with Jerome Powell and the Fed, seriously join us. It's so much fun. Like, it is a blast. It makes my day. I'm on like no sleep. I feel like absolute shit, but it was so worth getting up this morning and hanging out with you guys. Seriously, join us next time. It's so much fun. But my point here is that you have now inflation across the globe. Is it getting better? Yes. Are we past the peak? Yes. But some countries, some regions are having a delayed effect in inflation. Some countries are more affected by U.S. policy, right? There's going to be countries out there, I kid you not, this happens every time I do this. I've been covering this now for a long time. There's going to be countries out there that as soon as the Fed announced their thing, they're going to do exactly the same, just like that. The Fed will literally come in like that. You'll see a whole bunch of them. A lot of Gulf countries, right? Middle East, they will follow the Fed's cues to the T. So the Fed's also going to be paying attention to the UK. And you're like, Klaus, why would the Fed, though, pay attention to the UK? Because remember, we're all dealing with bond gap issues. These bond gap issues that we're dealing with all have to do with the bonds being worth crap because of how fast we had to jack up rates to curb inflation. So now if we have bigger bond gap issues with UK-based banks, that now puts the markets at even more of a risk, right? Because now you have UK liquidity issues. The UK bond gap is going to get bigger than the United States' bond gap. Big problem. Crypto traded globally, yes, but we're learning that a lot of the US financial pull is already priced in. But now we're becoming more savvy investors, more savvy traders, more savvy enthusiasts, more savvy in general. And people are starting to get this data faster and being able to disseminate it. They're starting to see the tool, share it, spread it. That's why now it's not just the data that comes out today, but how deep can we dig with this data? And can we make more rights than wrongs? All right, so let's put a pretty little bow on this. Let's get a little summary so I can kind of tie this up, because I know this gets really deep and I know there's just so many layers to this, but this is the complexity of global finance and the understanding of macroeconomic events and what's happening with the market and trying to digest it. Am I happy that we got to 5.0? You bet your butt I am. But it's how we got there. If we got there by a short-term energy pop relief, okay, cool. But then if we know OPEC's cutting and we're just going to deal with higher gas prices and higher energy prices for the summer, that sucks. We were looking at energy to get relief and OPEC kind of us. Global macros do make a big difference. Now, XRP Xlm, what are we going to get for that? Well, obviously, court case for XRP is the big one, Ripple Labs, right? But how much action is priced? And you even saw today, gold. Look at the price of gold today. Gold popped, and as soon as it popped, people are like, yo, we got to take profits. XRP Xlm did the same thing. Oil, same thing. Everything today that moved on the CPI data all took profits like that. Just clipped at the top. Finicky markets. It's because the markets are reading more in the data. That's why it's so important to not only pay attention to what the market does before it, during the data release, but also after the market digests it and crunches the numbers. Speaking of crunching the numbers, that's what I'm going to do right now. I'm going to crunch some CPI data numbers, come out with some projections, start working on future content, and of course work on my goal of a 6-minute flat mile. Oh shit, 6-minute flat. You want to learn about that and the stuff I do outside of crypto? That's this channel right here. You want crypto Web3 action because you love it, because you love the channel, the juicy goodiness? God, I love you too. That's right here. Until more news breaks, pre-burn, crunching numbers, I'll catch you cool cats later.